Ladies and gentlemen, welcome to Man in America. I'm your host, Seth Woolhouse. So you probably don't see a video right now because my guest could only come in via audio today. So this is going to be an audio only interview, but I think it's going to be really enjoyable. It's because it's jam-packed with critical information. So joining us today is David Jensen, someone that understands the financial world better than most people I've ever come across. Now, I recently heard him on SGT Report with Sean over there, and I found a way to got a hold of him. I said, you got to come join my show because the information that he presents and the narrative that he puts together on what's happening with our global financial system is extremely important. So I hope you really enjoy this interview with David Jensen. Before we get started, make sure you're following me on social media at Man in America and at Man in America on US on Twitter. Every show is also done as a podcast. So if you would rather listen instead of watch, just go to your favorite podcast app and search for Man in America and you'll find me there. All right, folks, let's jump into this interview with David Jensen. All right, well, David, thank you so much for joining us on the show today. It's an honor to have you here.
My pleasure, Seth. It's good to be with you this first time.
Yeah, absolutely. I felt great and lucky because I heard you. I listened to SGT Report and I heard a recent interview you did with him. And I thought, gosh, this guy really understands what's happening with the financial system. And thankfully, I was able to get a hold of you and have you on the show. So for a lot of the listeners, it might be their first time seeing you or hearing you. So can you give us just a quick background on just what you do and what gives you this perspective you have on the financial industry?
Well, my background is I'm an engineer, worked in the aviation industry as a professional engineer, worked on the Bombardier programs and on some military programs as well. And I went back to university in the 90s and I did a corporate law degree and an MBA. And I came out of that schooling and I guess about 2003, I started to see signs that things were not as they should be. So it's been quite a long path for me. And what happened to me at that time was that I recognized, and it's been an ongoing process. It is not by any means an overnight process, but that the entire economy and the entire system in which I was a fervent believer is basically structured on endless money printing and bubble blowing and crashes. And that instead of having organic growth based upon steady increase in productivity, that we have an economy based on just pure money printing and or currency printing, really, because we don't have money. But the currency that we have is a debt-based currency. So if you're going to print the currency and blow bubbles, you're going to have to continually increase the debt. And it reaches an endpoint where, the economy no longer functions because you just increase the debt so much and there's so much money sloshing around or currency sloshing around that you have essentially runaway inflation in the end. And that's the point that we are at now. So, my first step kind of in a public focus was back in 2007. David Dodge, who's the governor of Bank of Canada, was giving a speech at the Vancouver Board of Trade in Vancouver. And I spoke to him after his presentation because he had been a visiting professor at the University of British Columbia in Vancouver, where I did my MBA. And I was chatting with him about, he was saying that we were seeing the trouble in the 2007 markets with the asset-backed commercial paper market crashing. And he was just saying it's an adjustment to risk tolerance. And that once we've gone through this, that the economy will get back into steady growth again. And I said, well, my perspective from what I can see at this point is that we have a system which is based upon continual debt increase, not productivity output increase. And that it's been predicated on rigging certain markets, including the gold and the silver market. And I think that what we're seeing here now is that we're in for basically a Austrian school type of crash where your credit system can no longer create the appearance of growth through added debt, and that the markets are going to let go. So that's brought me to this point here. I'm spending most of my time running a couple of private gold and silver mining companies, But I try to get my thoughts out to the public as best I can to share what I've found over the years, and also to get feedback from people. But I'm hoping to play a productive role in terms of informing people and helping people adapt and prepare for what is coming, because it's going to be a bit of a rough ride.
So, gosh, I can imagine that with the background that you've had and seeing the writing on the wall for so long, that, for a lot of folks, it's now the reality is just starting to settle in of where we're at. But you've seen this for a while, and so, but you mentioned, kind of looking at what's coming and that it will be a rough time. What do you see unfolding? I know that no one has a crystal ball, but based upon where we're at, where the global financial system is, what do you see coming next?
Well, my view is that the economy crashed in the late 1980s, just after Greenspan became Fed chairman. The Federal Reserve, the central planners there at the Fed, decided that they were going to embark on a policy of blowing bubbles, sequential bubbles and frequent bubbles, and then to crash those bubbles. So they would blow the bubbles by essentially running loose money, and then they would tighten the money supply and crash the bubble, and then blow another one to compensate for the crash. That works for a period of time, but what they've had to do now with the '08 crash was they had to embark on this new added, call it in air quotes, a tool, and that tool was quantitative easing, which, if you want to distill it down into the vernacular, it's basically printing money and faking asset prices. And so that was what really changed after '08. And I saw the '08 crash, and I did not see beforehand that they would embark on this QE process, but we've seen it well and truly since. And the problem with that policy is it doesn't clear from the economy the malinvestment created by the Fed's bubble blowing, by the loose money. And so what we're at, the stage that we're at now, is that even that quantitative easing bubble of printing and buying assets and giving the cash to banks no longer works because of the very high inflation that we have post-COVID. And what happened with COVID there was that they increased the total amount of money in the economy by 40% over a 2-year period. And that's what's driven price inflation so high. So if the Fed embarks on this quantitative easing, this money printing scheme again in any meaningful level, it's going to send prices of goods prices and commodities, oil, energy, everything, food, anything that's real of intrinsic value, it's going to send it through the roof. And that's going to spike interest rates and then bring down this debt-laden economy that we now have. So we're at the point now where they need to do something, because it's visible that inflation's running high. Assets are being yanked out of the banks because the banks, their balance sheets are highly impaired, and there's enough people that can see the problem in the banking system that they're pulling their money out. But there's very little to do right now in terms of repairing the bank balance sheet, because that money printing scheme of quantitative easing has been pulled away out of the hands of the central planners at the central banks globally. And we're now going to see the consequences of this 40-year period of extraordinarily loose money.
And what do you think those consequences look like?
I think it's a debt system failure, a spiking interest rates, crashing debt values, including bonds, which are the majority of the holdings of pension funds. And ultimately, because all of the West has debt-based currencies, when the debt markets fail, the currencies fail as well, or have stepwise devaluation to them. So now there is one thing that the banks can try to do to repair things, and that is to seize the assets of depositors and get those assets That basically, let's just look at the savings portion, but they can seize savings accounts and convert all or some of them. It'll probably be some of it, not all of it, and convert that into stocks in the banks. So that takes that off the liability side of the bank's balance sheet and converts it into equity in the bank. So we've seen this before in Cyprus and in Greece, and they basically seized deposits and then converted it into bank stock that you couldn't, for instance, sell for 30 years. And also a portion of it was converted into an interest-free loan to the bank, which would be repaid after 30 years. So that's kind of the point we're at now, Seth, where the money printing debt bubble scheme has reached a terminus, and further juice only creates more inflation and higher interest rates, which compounds the problem. So I'm getting ready to see liquidation of assets in the financial system. Asset values disappear, and then also seizure of assets by the banks and conversion of those assets, the deposits, into bank stock.
Which is basically a bail-in, right? That's what we're.
That is a bail-in. Yeah.
So for people that have money sitting in a savings account somewhere where they feel like, oh, it's safe, it's with this medium, regional bank, et cetera, that when to save themselves, and I think that it's already written into the contracts with the banks, they can basically say, we're seizing your money, converting it into, stock in the bank or whatever, which is really useless, and that the people are end up with nothing. I mean, it sounds like, looking at this and looking and studying, Weimar Republic or Venezuela, that this is a different scenario than the housing crisis in 2008 or even the Great Depression, which was a panic and bank runs, because neither of those were the collapse of a currency. And so this is what it seems to be we're on the edge of the collapse of this debt-based currency system, but really the collapse of what is the world's reserve currency, which it's not like, say Venezuela, where it just affects Venezuela and maybe some neighboring countries. I mean, the countries all over the world are holding their assets in US dollar. So that this seems to be like a pretty significant event.
It is. And I mean, basically the debt bubble / money printing scheme of the central banks has reached its limits, but there's nothing special about the US. All of the Western countries in particular have been embarked on this scheme of loose money. There's nothing special about the US. They just did it to the largest scale in terms of the value of the dollars that were utilized the way they were and were created the way they were. But I think what comes out of all this ultimately is a hue and cry and anger from the public. And then what we're going to see now is the central planners are going to say, well, those bankers are bad. They're so bad that we can't go with a bank created. The banks create currency when they make loans. It's the first thing people have to understand is that the majority of money is created by bank loans, which is why the bank balance sheets keep increasing and the amount of loans keep increasing when you run loose money. But the banks create the loan from nothing and put the cash in the account of the borrower and then put the loan on their balance sheet as an asset. But I think what comes of all of this is that the government say, those bankers are really bad. Look what they've done, negating the fact that this was all operated by central bankers, who are the central planners operating underneath the auspices and the control of the government. But what they're going to do is point their fingers at bankers and talk about how bad they are and how the solution for all this is going to be a central bank digital currency. So the central planners crisis created by the central bankers and the banks under the overview of the government is going to be solved by the government saying, the only way to deal with this is for we, the central planners, to take more control. And as a consequence, you need to have the central bank digital currency where, the government will be the single repository for all savings, Here's some money, and we'll give you universal basic income, but we also need to make sure you do the right thing. So, we need to highly control how you spend this money as well. So, I think this is the kind of the final domino to drop in terms of putting in place a control state where the voice of individuals is taken away and it's put in the hands of the usual suspects.
And so if that's, 'cause I've spoken a lot about this before and talked to a lot of different guests about the dangers of the CBDC. And, so if that's coming in, so it seems like what I'm seeing in piecing it together is that there's, and I guess you could say that there's wars happening at the very high levels of our society. It's not like there's just one central group of bad guys that are taking over the entire world with no opposition. I see it as there's multiple groups. And if you look at what's happening with the BRICS nations and the currency, the plans that they have to have a commodity-backed currency, like with Russia, for instance, pegging the ruble to gold, and indications that other nations would be following, and then creating their own basket of currencies that are tied to commodities. It seems like that would be a competing system to a central bank digital currency that would probably be coming out of the European central banks. How do you think those two systems will interact? I mean, is the BRICS, or is what they're doing just going to be folded under, or is that going to be a competitor that will weaken the efforts of pushing the whole world into a CBDC?
Well, I think that the major countries of the BRICS are each going to have their own central bank digital currency. First of all, that's not something that can't happen. So what you end up with is major blocks. You end up with Europe, you end up with the BRICS, you end up with North America. And the old Latin American model was that you had a two-tiered currency system. One was the local currency for controlling citizens, and then the other one was typically USD, US dollars used for trade, and the wealthy in society used between each other, because cyclically and regularly the local currency had its buying power destroyed. But you can have a digital electronic currency in many areas and spheres, and then still have a global unit of exchange, but both of them being digital currency backed, or digital currency founded. But what you may have with China, for instance, is that they go to a gold yuan, which is a gold-backed unit of currency for international trade, as a way to gain international authority and control, just as the U.S. did it with their petrocurrency since the 1970s.
Okay, so that makes sense. Now, would you foresee a rise in parallel economies? And because I know that for myself and a lot of the listeners, we see this coming, and we're thinking, well, I will do everything possible to not participate in this. And so a lot of folks are, pulling their money out of the dollar, and they're putting it into silver, gold backs, ammunition, food, even diesel fuel. Like I went out, like a year ago, when we had these shortages, I went out and bought a 300-gallon diesel tank and thought, well, I might as well buy some diesel because that's going to become an asset in the future. So do you think that there's going to be pushback in the decentralized way like that? All right, folks, I've got a quick message for you. As you can hear in this interview, the financial system is going through some massive changes. No, this isn't just some sort of minor recession or things are down because of the job reports. We're going through a fundamental transformation from an old system into something else. And this old system is this US dollar fiat system, which has been a tool of the elites for a very long time to fund their global wars and to fund all their blackmailing and money laundering. And it is coming to an end. Now, the end of the system is a good thing in a lot of ways, as we're talking about, because it means we're going to return hopefully back to sound money. But it's a bad thing because for a lot of us, our entire life savings are tied up in this US dollar, in this fiat currency. And so if you're concerned about what's going to happen to your money, which I think is a very fair way to think right now, which I'd be very concerned, I am concerned, One solution I can highly recommend is putting some of your assets into physical gold and silver, right? As we're talking about here, you can see in this interview, we discuss how the silver values, the gold values are being suppressed. Now, look, I'm not trying to predict something and say, look, you're going to make a lot of money with this. But personally, I think that once this old system really falls, their ability to control and manipulate the prices of silver and gold will end. And I think that we're going to see the prices of gold and silver reach highs that we could never imagine. But even if they don't, and they just hold their value amidst the collapse of a major currency like the US dollar, you're at least preserving your wealth. So I highly recommend, if you're interested in this, the first step, set up a free consultation with Dr. Kirk Elliott. This guy understands gold and silver like you wouldn't believe. He has a free wealth consultation with him or someone on his team where they're going to walk you through, see what your goals are, see where your money's at, and put together a solution for you. And it's free, best of all. So to learn more about this, go to goldwithseth.com. Again, it's open up a new tab on your computer or your phone, goldwithseth.com. You scroll down, there's a simple form you fill out for this free consultation, or just call 720-605-3900. Again, goldwithseth.com or 720-605-3900 to set up your free consultation today.
I think there is going to be, I think that the biggest challenges are going to be in the urban centers where there aren't a whole lot of resources. And people, by and large, have most of their money wrapped up in very small parcels of real estate. What I do see arising here is, as you mentioned, parallel economies. And the biggest enemy of this fiat debt currency system has been silver over the last century. And the reason for that is that silver is so highly distributed globally in the hands of citizens. Basically, it's peer-to-peer, person-to-person exchange when you use it. And the government is screened out of the process, as is the banks. And just to give you a sense that there's been about, in round numbers, 50 billion ounces of silver mined throughout history. And about 25 billion ounces of that is still above ground. Now, about a third of that, in round numbers, about 8 billion ounces, is in bar and coin form. And the rest of it is in various industrial things and silverware and jewelry, etc. But I see that as being the most viable means of exchange. And I think it can arise quite quickly as the price control is lost through the trading in London primarily, but also in New York, where they trade basically fiat units of silver and gold in terms of using unbacked promissory notes for settlement of trade of gold and silver. So they historically, like 10 years ago, they were trading 2.5 times annual mine supply every day of gold and silver in the London market. And so what happens now is that as trust is lost in the system, that individuals are going to be looking for getting hold of physical metal, and then that will become the key. There will be shortage. And as we've seen with the palladium market starting in 2016, when there were shortages, it totally destroys the ability to artificially set the price using these promissory notes in London and New York. And so what I see is ultimately price control being lost in silver, and then it's going to jump, in my view, manifold times in terms of value. And then because of its highly distributed nature, it allows person-to-person exchange. But the biggest challenge that we have is the intermediary time from the onset of crisis to the realization that citizens hold this form of money. It's not a currency, but it's money because it has intrinsic value. And that's going to be the rough patch, to put it as gently as I can. There's going to be a very rough period where exchange is very difficult, and there's mass shortages, to the point where individuals recognize the value of what they have and start to utilize it as a means of exchange. And because it competes and it's a superior form of exchange, a superior medium of exchange compared to digital currency, It'll probably be outlawed, but that will only, in my view, drive up its desirability to individuals, and it would just move it into a black market.
So you answered a little bit of one of the biggest questions I had, which is really how they're suppressing the price of silver, because I've had a lot of different guests talk about that, and I've understood that they're doing that. But am I correct in understanding that the way that these bankers and these central planners are suppressing the value of silver, as an example, is, you say, having these almost like these fiat promissory notes where they can artificially inflate the supply of silver almost in an unlimited way, which allows them to keep down this, so supply and demand. If they have unlimited supply of it, then they can keep the price at, say, $25 an ounce. Is that how they're doing it?
Yeah. Yeah. In short, just to give you some background, in the 1970s, over from 71 to 80, the amount of money in the U.S. system, as measured by the money stock, M2 it's called M2. It's a measure of the amount of money in the system, but it went up by about 2.3 times. And the price of gold and silver went up by 21 and 25 times in that 9-year period, because of the money printing that went on. And so starting in 1987, the Thatcher government brought in what's called the Big Bang financial system reform. And part of that reform was that it handed over control of the London gold and silver, platinum and palladium markets. It handed over control of those markets to the Bank of England, who are the central bank for the UK, for Britain. And essentially, gold and silver were warning systems of loose money, and control of the warning system was handed over to the UK central bankers. So since 1987, what we've had is that the Bank of England, having oversight over that market, permitted trading. And by the way, the London market has been more than 85% of global daily gold and silver trading, just to give you an idea of how important that market in London is. And so it basically gave control of oversight of the pricing system to the central bankers. And it's no wonder that gold and silver, which are the essential warning system of loose monetary policy by the central bankers, was suppressed by the permitting of the use of trade of promissory notes. They basically terminated the requirement to have metal or bullion in the market in order to trade that metal. So in essence, you could just write a contract with promise to deliver if the other party wanted the metal itself. And of course, that led to this completely wild trading where, you have hundreds and hundreds of times the amount of metal that's available being traded in the market, because you have these promissory notes, or you can call them tickets. Basically, they're just electronic or paper promises. And that's what led to the apparent oversupply of this metal. And there's been other things that have happened in the meantime in the market. I won't dig into that now, but that's essentially the underpinning of the rigging system, was this transition of the UK and US markets in London and New York to this promissory note trading system, which led to the underperformance. And just as a final point here, since 1980, the amount of money in the US system, we'll call it M2 again. It's not the best measure, but it's a measure that's published and easily accessible. It's increased by 13 and a half times since 1980. But today, the price of silver is only half of its 1980 high price, and gold has only doubled, while you've had a 1,350% increase in the amount of money, and you've seen the debasement or dilution of the US currency to that level.
That makes a lot of sense. So basically, in understanding it, is that the central planners and central bankers, through their fiat kind of currency system, through this, it's really, I've heard referred to as Babylonian money magic, right? through the ability to create
Yeah.
money out of nothing, they've
Yeah.
been able to use that money, which we know that, they've used it to fund the military industrial complex, to fund all the wars, to fund all these social programs. And, when you see these country or these large corporations like Nike, for instance, and whatnot, that are destroying their businesses, or like Bud Light recently, right? Where it's, go woke, go broke. It's almost like they don't really care because there's this unlimited money supply. And it's kind of a simpleton way of looking at it, but that kind of represents to me that they have used this basically unlimited supply of money to fund all of their evil empire, but also to suppress the value of items like gold and silver. And so now that we're entering into the kind of the end, it's like they've been blowing up the balloon, right, of this
Yeah.
money so much that, I guess you can call it inflation, right? Eventually it pops. And when it
Yeah.
pops, the whole system comes down. What also comes down with it is their ability to suppress all these other assets. And so it's almost like, not overnight, but during that period, everything gets reset to its real value again, which means a dollar goes to zero and silver goes to whatever.
Right.
And is that a good way of understanding it?
Yeah, the currency becomes rejected, and we saw that. For instance, in Venezuela with the peso crisis in 2002. They in a few weeks they had a 70% devaluation of the peso, and people rejected it. They wouldn't accept it in the stores, and what happened was that street markets were set up for trade, and the unit of exchange became individual links of gold necklaces in order for food to be bought and sold and for fuel to be bought and sold. But essentially what they did was they shut off the warning systems. And then just like you could turn off the warning systems in a nuclear power plant and run it at 200% of rated output for a short period, that's essentially what they've done with the global financial system since the 1980s. And yeah, they funded wars and funded some social programs, et cetera. But the biggest thing that they did was that they blew a succession of financial bubbles. And what that did was that it extracted wealth from the middle class, where the bulk of the wealth used to be held, into the hands primarily of an extraordinarily small class of individuals who were able to strip the wealth out of the hands of the public by operating in the financial system and using the tools using the tool of central banking as the wealth extraction primary mechanism that allowed this blowing and crashing of successive bubbles. It's been a tremendous wealth ratchet that's really tightened up the grip of the vast majority of global wealth into or a large portion, I should say, of the world's wealth into the hands of a very small subset of individuals.
And so if we look at the examples in history that show us just little kind of small windows to peer into what happens when the true valuation kind of resets itself, like as with Venezuela, for instance, where, you see the iconic pictures of people with a wheelbarrow full of the local currency to buy a chicken, as an example. But I heard you mention, on Sean's show that they could also, for an ounce of silver, a family of 4 could feed itself for a month. So is that kind of a little bit like a micro example of what happens when the levers of control no longer work anymore and things kind of balance out?
It is. I guess the biggest challenge is that the North American and European food production system is really dependent on a functional supply chain, and the supply chain itself depends on fiat currency up until now. And as I said, it's the transition time that kills, where there's going to be disruptions to food supply and energy supply, et cetera, et cetera. But that's also how you get people to accept the central bank digital currency. You say, terrible things have happened, mistakes were made, and the way to make sure this never happens again is you need to take a central bank digital currency, you need to take a digital ID, universal basic income, and then live in your sustainable 400 square foot apartment, right? So this is how you forcibly transition an economy, by making people desperate. And it's been recognized for a long time. If you read, Zbigniew Brzezinski and Henry Kissinger and some of these key players, they know that the way to transition economies and societies into something people would not normally tolerate is by first making them desperate and then offering them the solution.
Yeah, creating crisis and then offering them protection from it, at some loss of freedom. And yeah, there's a quote from Kissinger I came across at one point that was something like that. If you can create something that they will fear, then people will gladly give up a little bit of their freedoms for protection from that perceived, feared item.
Right.
And so, which I mean, gives me even more motivation to say, okay, well, I'm going to do everything possible to prepare now and plan, that way I'm not one of these people that in order to feed my family, I'm forced to get into a digital ID bread line, you have to kind of put it bluntly, like we saw as happening in different countries around the world. And I know this is more of a curious question, and it may not be as easy to answer, but if the price of silver was not suppressed, if all of the mechanisms of controlling the price of silver were removed amidst this, what kind of value would you see silver returning to?
Well, that's a good question. I mean, if we didn't have this debt bubble, you'd have an equilibrium price, right? But the challenge here is as the debt bubble collapses, that there's very few things that hold value, and the value of silver and gold is that they're portable, highly portable media of exchange, right? So they can actually become overvalued in a crisis. And so, if we look at, let's say, the 1980 high in price and say it's like $50, but there was still a functioning fiat money system, so that it hadn't reached its full value because it hadn't replaced the fiat currency yet. But if you look at that 1980 high price of plus or minus $50 an ounce, and then you say, the amount of currency in the system has been increased by 13 and a half times since then. Now this could be out by 50 or 75%, but it just gives you a sense there of the potential value of these things. But we've lived since, the late 1800s, when silver was actually demonetized. We've lived in a system they initially went to a gold-backed system because the gold-backed system was far more concentrated and controlled by the money-centered banks in New York and London. But it's very difficult to give an estimate. But historically, if we look, like the shekel was a Middle Eastern, and it wasn't Israeli by any means, it was a Middle Eastern unit of currency. And it was roughly 11 grams, so call it 1/3 of an ounce. And the typical pay for a soldier or a skilled laborer was about 1 shekel, or 1/3 of an ounce of silver for a day's labor. So there's two kind of examples of the potential value of it, where it is used as a functioning medium of exchange and as money. It's durable, it's divisible, it's portable, and it has intrinsic value, right? Those are the 4 characteristics of money. But anyways, those are two kind of examples of what it can reach in a crisis time, or on a sustained return to gold and silver as money again. So a very tough question, Seth. It's very tough to estimate these things because of we've had more than a century of fiat money, where what they called elastic currency was created by the central planners.
It's also, I can see how it's difficult to answer because what do you measure it by, right? Because there's the adage that people say, well, an interesting thing with an ounce of gold is, say, in 1920, you could take an ounce of gold and you could go buy a suit with it, right? Or a $20 bill, right? You could go buy a suit.
Yeah.
They say, well, now, you can still take that same ounce of gold and go buy a suit with it, right? Whereas $20 won't buy you.
The labor that goes in. but the labor that goes into a suit now is maybe 10% of what it was back in the 1800s. Right? I think that's the part that's missed. And the cost of creating the textiles is so much less.
That's a good
So
point.
yeah, you can still buy a suit with an ounce of gold, but the net labor and resource cost that goes into it is maybe a tenth or less than what it was back then. So there are all kinds of measures, and nobody knows for sure, and it may well be regional in terms of its valuation, but you see, it doesn't get valued against currencies ultimately, I think, because the currencies become rejected.
Yeah.
Right. The central planners have showed their hand now. Like, we've got more than a century of mess that they've created with control over the currency. And so I think the way you value these the two monetary metals, the essential monetary metals that have a 4,000 year history as money, is you value them against other goods. So, how much does a set of tires cost? And how much does 100 pounds of potatoes cost in terms of gold or silver? And I don't think that there's going to be it'll be very difficult to get people, especially in the front end of a crisis. And with front end, I mean the first 5 years, to exchange these valuable units of money for the fiat currency that's being soundly and roundly rejected globally. I think you can exchange labor for them, and you can, goods and services can be exchanged for them. But I think we're going to have a real serious issue here in terms of loss of trust of the public for these unsound and highly destructive currencies.
Yeah, that makes sense. And so I guess it's I think, as I mentioned before, we got into the show, but one of the goals that I have with these kinds of interviews is just to try to take a sober look at where we're at. And I know there's a lot of folks, and I think a lot of people are listening, they understand, but maybe their spouses don't, or their kids don't, and they talk to them, and their eyes kind of glaze over a little bit, and okay, hey, turn football back on. But
Yeah.
I do think that there's something I really try to remove myself from what I want my life to be, and just try to look at what I see unfolding around me. And I mean, it does seem, and again, talking to you even more so, but it does seem like that we are entering into a period that we've maybe never been through in our lifetime, or even the past few many generations, but that we're entering into something that could be much more significant even than the Great Depression. Is that what you're seeing?
Yeah, I think so, because we have the same setup for a crash as the Great Depression, but during the Great Depression, America had a sound monetary unit based on gold. When I say sound, I mean they basically took it out of the hands of the citizens, made it illegal to own gold from 1933 to 1971. But the unit of trade wasn't questioned globally, and the unit of trade the unit of exchange, wasn't questioned within the country because of the recent exchangeability of the currency for the gold, and the U.S. Treasury still held a lot of gold at that point. So people trusted the system, and they were willing to exchange labor and goods for the unit of exchange that was given out by the Treasury, by the Treasury itself, and modulated by the central bank. So I think what we're going to have now is a rejection of that by people that have observed patterns in the past, and they're going to not accept it. And I guess, as I mentioned earlier, that a very good analog is what happened in Argentina with the peso crisis, is that in a few weeks, with a 70% devaluation, and that the population said that we don't want that stuff. We don't want to exchange our goods for that stuff because it's unsound, and who knows if it loses another 70%. And that's why immediately the system flipped over. They couldn't access US dollars because the banks were shut. and they wouldn't hand over dollars in appreciable amounts once they reopened. And that's why they turned to individual units of gold necklaces for a unit of money to have the exchange that was necessary for to maintain some semblance of life. We have a lot farther to fall in the West, Europe and North America. And as I said, we're much more dependent on supply chains than they were in Venezuela. In Argentina in 2002. So we still have to see how this plays out. But I think it's a good note for what happens when these crises hit.
Yeah, it's a good point as well. And it reminds me of just when you talk about supply chain, everything, look, like as of right now, we grow food, we have gardens, I have chickens and whatnot. But if I want strawberries, I go to the local, grocery store and we like organic, so we'll get strawberries and I'll look at the, grown in Mexico, very common. And,
right.
So a lot of the food that I'm eating that people are used to eating and that the most of the supply chain, most of the food supply chain is built upon a really, really insanely complex supply chain of,
right.
things being picked with some sort of advanced technology, some sort of, a big machine that, that needs a lot of diesel fuel to pick and to harvest, and then it gets shipped and it gets processed and then it has to be in refrigerated shipping. And then eventually it makes it to the grocery store, and the grocery stores only keep a couple days worth of food on hand because it's all electronically kind of modulated. So when they sell out, it comes on the next order automatically. Like that whole system with a failing currency, the whole system collapses. And if you look at what happened in the Great Depression, not only were the supply chains so simple, I imagine for most people, they went to a local grocery store that was selling what the local farmers were selling to the grocery store, which was selling to the people. Right. So the supply chain was so simple, but also the majority of people had gardens. They knew how to can food. They knew how to hunt. They knew how to fish. And especially nowadays, now I live out in the country and my neighbors, they know how to hunt deer, they know how to fish. We've got gardens, but that's the minority in America. If you look at the populations in the city centers where, I mean, I foresee that to be very difficult because that's a whole other difference between now and the Great Depression period, not to mention the morality of people, the social unrest that we had, the fact that during the Great Depression, the government seemed to be trying to help the people, right? In introducing victory gardens even and everything like that. Whereas now it seems like the government just wants us all dead. Sometimes it feels like that's their goal. Yeah. So, wow.
Yeah. If I recall correctly, I think that during the Great Depression or the 1930, that about 80% of the U.S. population lived on farms and in small communities. And now, in terms of the farm population, I think it's about 3.5 or 4% of the total population. That has dramatically changed. And as you mentioned, the personal disposition and basically the narcissism that's seized the psyche of our culture. It works against people being productive when they think that they have entitlements, right? So it's a very, very challenging setup, and it as you say, we can't predict exactly what's going to happen or what we want to happen, but we can kind of prepare for the things that we see developing in front of us.
Exactly, and that's why I think that these conversations are very important at this day and age, because it helps give people more insight and we know what's coming. So, well, David, I really, really appreciate the time that you've spent with me today. I want to encourage folks to check out your Substack, right, which is this jensendavid.substack.com. And I'll put that in the show description as well. And I know you're also, I think you're on on Gab, which is how I found you. You have a Telegram and Getter. Is that correct?
Yeah, I used to be on more platforms, but I was posting some medical research papers on Twitter back in December 21 on ivermectin, and I was deplatformed there, and then LinkedIn deplatformed me for posting research papers, like legitimate medical research papers, were being posted and deplatformed there. So, yeah, I've kind of fallen back to a position of basically putting out videos occasionally, commenting what I see, and hopefully helping people get a perspective that maybe can help to shape their worldview and help them prepare for a disruptive time that we have coming.
Well, great. Well, your advice is really, really appreciated, and your wisdom, and it's been it's been very nice speaking with you, because you have a way of breaking these things down in a way that makes sense, and it's easy to listen to and easy to process. So, thank you again for coming on. We'll definitely have to do this again, perhaps in a couple of months once things unfold more and we've got more to talk about. But again, I encourage people to check out your links in the description to the show. So, David, thanks again for coming on.
It was my pleasure, Seth. Thank you.
Absolutely. All right, folks, I hope you enjoyed that interview with David Jensen. I learned a ton, especially about the manipulation of the silver and gold prices and how that whole mechanism works. So anyway, I thought that was an incredible interview with David Jensen. I've now got an urgent economic update with you. So we're going to be following up with an interview with Dr. Kirk Elliott. So hang on tight, folks. It's going to be a critical show for you to continue watching. Thank you so much for joining us today.
Hey, Seth, it's so great to be with you. And man, brother, you nailed it. It is the de-dollarization of the world. And if you look back throughout history, reserve currencies, they've always had one, but they last on average 80 to 100 years throughout history. Before us, it was Britain. Before Britain, you had Portugal, you had Spain, you had the Dutch, it just goes back, and the length of time is 80 to 100 years, where there's reason for that, right? Because what is a reserve currency? So let's define that first, right? It's all international settlements are traded in the world's reserve currency to add monetary stability to a fractured world, right? So for example, we go back to 1944, the Bretton Woods Agreement basically made the US dollar the world's reserve currency. And then they amplified that in the 70s with the emergence of the petrodollar, meaning all oil settlements too are traded in US dollars. So what does that do? It builds in demand for the currency, because everything, even more so than just domestic use of your money, it's needed for all international settlements of like everything, right? So therefore, a country has to print more than what they need domestically to fund all of those expenditures. Well, people forget after decade after decade after decade of basically that happening, and say, wait a second, America, you're flooding the globe with your currency, right? You've got $32 trillion worth of debt. You're just printing like there's no tomorrow. Well, if I were a policymaker at the Fed in charge of printing money, I would say, I have to. It's what a world reserve currency does. Right. So, but the rest of the world says, well, we don't care anymore. You've squandered your time in the sun. Look, you've ruined everything. You've gotten way too much debt. You're devaluing your currency. So we want something new, right? That's just human nature. So we happen to be alive during that 80 to 100 year span of the US dollar being the reserve currency. So it's going to fail. But that's the human psychology element of it. The reality of it is you've got other big players that want to be the world's reserve currency next, because look what it did to America. It became the most profitable, industrious, amazing nation ever in the history of the world. And so people want that, right? So who wants it now? The BRICS nations. But to replace the US dollar, you have to have, what are the common elements? A super strong military, a super strong economy, and super strong, global political structure, right? Something that people actually honor and revere and are kind of afraid of, so to speak. So do any of the countries in the BRICS nations really have that in and of themselves? Not really. They have a lot of those elements, but together, collectively, they've got them all. Massive military, massive political exposure, massive economy. They've got it all. So therefore, now all you have to do is start dismantling your competition. And this is what they're doing. So you go back we don't have to go back far, like a week and a half, right? Is like, so what started happening? Brazil started to say, okay, hey, China, we're not gonna trade in US dollars anymore. We'll trade in the yuan. And then India made a deal with Russia that said, hey, we're gonna trade in the rupee instead of the dollar. And then there's a trilateral agreement between Saudi Arabia, Iran, and Russia saying we're gonna trade in the ruble. It's like boom, boom, boom. It just keeps happening. But this goes back to Russia basically telling India and then Italy and then Portugal and it's like, well, and Poland, it's like, you can buy our oil, but we're not going to take dollars for it. I mean, this goes back to the kind of the beginning of the Russia-Ukraine conflict. So this has been being dismantled underneath our nose for like the last year. But everyone says, oh my word, it's happening like all of a sudden. It's not really all of a sudden, but it appears like it because now it's gaining critical mass. And we've got country after country after country dismantling. Then what? Last week, Japan basically snubbed their nose at the G7 nations and said, we know that in December we signed this accord that was going to cap out Russian oil at $60 a barrel. But you know what? We hear this big sucking sound, this vacuum of power leaving the West and going to the East. And so we want to be on a winning team. And basically they basically kicked their allies, while they were down and said, we're actually going to do something here with Russia, with China. So what did they do? I understand, Seth, politically why they did it, because they wanted to be part of a winning team, but they've got big bad China breathing down their neck. They don't want a war. They're right there on the South China Sea. It's like, what are we supposed to do? This new power structure is going to be the world's reserve currency. We want to be part of that team. So they got rid of their allies. And that one action, not their words, but their action, we lost the biggest ally that we had in Asia. And then what you just alluded to with Macron and France, see, we rebuilt France after World War II. We've been a very strong ally with them since World War II. Well, just over the weekend, Macron, the president of France, meets with Xi in China and says, you know what? We're going to reduce dependence on the US dollar. Okay. What did Xi tell France? He probably said, hey, we're going to be the world's new reserve currency. Join our power block, because it's obvious that the US is squandering their time in the sun. Right? It's like the power is
just from the horse's mouth. Here's what he says. So reading this article, it says French President Emmanuel Macron has suggested that Europe, not just France, so he's suggesting that Europe should reduce its dependency on the United States amid reports that some countries have begun, quote, de-dollarizing. So here's what he said, quote, there is great risk Europe gets caught up in crises that are not ours, which prevents it from building its strategic autonomy. He told Politico. And he's continued. He says the paradox would be that overcome with panic, we believe we are just America's followers. So, you see this, like this is significant. And you made a good point when you mentioned that people want to be on the winning team, right? So here in America, we look at teams and you have team loyalty. Like I grew up in Ohio and my dad is loyal to the Cleveland Browns. It doesn't matter how little the chance, how little the odds are the Browns ever winning a Super Bowl. He's just loyal. But countries aren't loyal to countries out of emotion. They're loyal because out of protection, safety, greed, etc. And so what's happening is that America is no longer the team that people want to be on. And so when you see this shift happening, like one of my favorite guests I've had on is a guy, Michael Yon, who's one of the most seasoned war correspondents there is. And we were talking about famine. I remember asking him about like, what is the trigger for this? And he talked about, he said, look, he said with famine, he goes, I don't focus on what the spark is that ignites everything. He's like, I focus on the conditions. He goes, you focus on, there could be 30 different conditions that all make famine a spark away. It doesn't matter what the spark is. Look at the conditions. And so if you look at like what are talking about with the de-dollarization, the collapse of the dollar, don't think about okay, what is the one thing that's going to happen that then, okay, that's when it happens. And focus on looking at all the data and say, okay, are the conditions ripe for this? Are we seeing this? And so actually I have a, to show here, this is a Twitter thread from a handle called the Prepared Homestead. And so this is from about a week ago, just showing the past week before that, all of the different kind of significant things that happened globally. And I went and I highlighted the ones that relate to the dollar or financial relationships between America. So when we talk about conditions versus the spark, these are the conditions. So I'll read through these quickly. I'll kind of summarize. Okay, Saudi Arabia enters trade alliance with China, Russia, India, Pakistan, and 4 Central Asian nations to step further away from reliance on the dollar. China and France complete first liquid natural gas trade using Chinese yuan, ending reliance on the U.S. dollar for energy trades. China and Brazil agree to settle trades in their own currencies, ditching the U.S. dollar. Brazil, Russia, India, China, South Africa, BRICS, are developing a new currency. Saudi Arabia partners with China to build a Chinese oil refinery for $12 billion. Kenya signs a deal with Saudi Arabia and UAE to buy oil with Kenyan shillings instead of U.S. dollars. There goes your Bretton Woods agreement. President of Kenya tells citizens to get rid of the U.S. dollars. You and I covered that. Association of Southeast Asian Nations considers dropping the U.S. dollar, euro, yen, and British pound for local currency financial settlements. India to settle trade in Indian rupees with certain countries instead of U.S. dollars. Chinese yuan surpasses the euro to become Brazil's second largest currency in foreign reserves. U.S. Social Security funds are projected to run out by 2033. It'd be a miracle if we made it to 2033. Former President Trump says that Biden is directly responsible for the bank failures and creating an economic catastrophe that will only get worse. Saudi Arabia agreed to join the Shanghai Cooperation Organization as a dialogue partner, China-led security bloc. We learned the BRICS reserve currency could be potentially backed by gold and other commodities, such as rare earth elements. Bank deposits fell $126 billion, $225 billion since the banking crisis started. 33 tons of gold were withdrawn from JP Morgan vaults. 4.8 million ounces of silver were sold from COMEX this past week. So that's just the events from a single week. I mean, one of these things happening a year ago was enough cause for me to get on here and to make a show saying, look, folks, de-dollarization is happening. China and Russia, or, China and Saudi Arabia had a meeting, right? But now it's like we're seeing countries all over the world. And now the countries that aren't even thought of as being these BRICS alliance countries like France that are saying that we're ditching the dollar. So, I mean, I feel like that we are on the edge of a precipice here. We're on the edge of a cliff. If not, maybe we're already in free fall.
Well, I agree. And, so they're in competition. They're in competition to be the world's reserve currency. They want to kick the US dollar out, right? So how is the best way to do that? Again, if you can't make yourself look good on your own merits, then make your competition look bad. Well, it's not too hard to make your competition look bad. Over the weekend, I saw a video. It was from October. It's a little bit older, but Biden was being interviewed at an ice cream parlor. And he's got there with this big waffle cone with 2 scoops of ice cream going, lick, right? And so the reporter says, hey, are you concerned about the demise of the dollar? This was back in October. And he said, no, but I am concerned about the demise of the rest of the global economy. It's like, so I take a step back, and first I wanted to laugh and then I wanted to cry. It's like, this is real legit stuff. It's like, and his actions preceding that actually amplify his message of he's not really the president of the United States. He wants to be like the president of the world. He's more concerned about them. So, and what other actions have come from there? Well, instead of worrying about our pensions, our retirees' assets, he's sending billions of dollars to Ukraine to fund their pensions, right? It's like, what country are you the president of? So if I were Xi in China, I'm looking at this and saying, they've got the most weak, incompetent leadership ever. And if you find a weakness, just like in any sport, you brought up the Cleveland Browns. So let's say you've got Nick Chubb as the running back, and you're playing a team that has a defensive line that's just a sieve, right? What are you going to do? You're going to run him up the middle every single time after time after time, because you can't stop that guy, right? So this is what the rest of the world is now seeing incompetent leadership. We've got a banking crisis. We've got everything that's happening with unsustainable debt, inflationary pressures, political consequences of geopolitical conflict, right? It's like, oh my word. So let's just make a run for it right now, right? And I think that's what's happening. They're seeing this open door of opportunity as the US can't withstand and can't stand under the pressure of the debt and the inflationary pressures and the rising interest rates. So the world would be crying out for a change. And it doesn't take too much to win that battle when everybody wants a change. And I think that's what's happening right now.
Absolutely. It really is. I mean, you can see it. I couldn't agree more. That's exactly what's happening right now. And so, one just, question for you. So, when I finish that list, actually, I'll pull it back up again, but the last 2 points there, how 33 tons of gold were withdrawn from JP Morgan vaults, 4.8 million ounces of silver were sold from the COMEX. And I've seen a lot of different reports indicating this, that really over the past 3 or 4 years, that the people in the know, the central banks, the giant wealthy families, they have been hoarding gold and silver like we've never seen before. But you're in the gold and silver business. And so we were talking before the show started, you can't hire fast enough to support what's happening. So what are you seeing from the average American? Because of course it's like, okay, it's one thing if, Sir Jacob the Rothschild is buying more gold. It's like, okay, well, he also owns, 47 yachts and 17 castles and all that. But what are you seeing? Because you've got your finger on the pulse for how the average American I would say that's more awakened to what's happening, right, is feeling right now, watching all this going around. So what are you seeing in your business in terms of volume or the overall just sentiment of the people that you're helping?
So we're seeing America collapse with all of this, right? And people are just exploding with fear. I mean, really, I can't even think of a better term. They're exploding with fear, and they say, I don't know what to do. My banks are failing. I got to get money out of the banks. I don't know what's happening in Europe, but I hear all this news that it's even hitting Fox News. It's hitting mainstream news that the US dollar is losing its reserve currency status, its petrodollar status, right? So as you see all of this happening, it's like they're scared. They're scared. And they don't know what to think. And then they call their current employer and they can't get out of their 401k. And then that makes it even worse. And so it's like, well, maybe I could just sit in cash. Well, I don't want to sit in cash because banks are failing. I mean, it's just this implosion of there's no hope, right? And when people lose hope, hope deferred makes a heart sick. So this is what I'm seeing on a daily basis is people calling and they've lost hope and they don't know what to do. And this is where we need to spread this message of light, because when you lose hope, you're willing to listen to almost any kind of a solution, right? Where the government's coming in with, yeah, banks are failing, stock market's failing, inflationary pressures. Look, we're losing reserve currency status, but hey, we've got this solution, the central bank digital currency thing, that'll bring order to the system. But that's not going to bring order. It's going to make matters worse. You never trust a solution that's actually being brought to you by the people that cause the problem, right? So therefore, what are we doing? We're shouting it from the rooftops week after week after week. It's like there is a solution. There is hope in this, and the hope is that Jesus is still on the throne, and none of this is a shocker to him, right? But you've also got solutions. There will be solutions for us to thrive in the midst of this storm, in the midst of the chaos. And that's what these people that call that are just gripped and paralyzed with fear and crying on the phone with me, dozens a week. And we're praying with them and trying to bring peace, but showing them a solution. It's like, you know what? You're afraid your cash in the bank's going to go away. You're afraid that your stock market profits are eroding to almost nothing. Real estate's collapsing. But what's happened to silver? Like what we were talking about, all those ounces of gold and silver drawn out of those JP Morgan vaults, where are they going? Well, they're going to wealthy individuals, or they're going to countries as they're backing up their reserves with gold. But why? Why would billionaires or countries? We're talking about a lot of ounces coming out, or a lot of tons really coming out of these vaults. Well, they're not going to do that to make a bad decision. They're billionaires, for crying out loud. They're captains of industry. They're countries. They see a paradigm shift happening right underneath their nose, so they're just moving to safety. They're not operating in fear. They're operating in wisdom and courage to do the right thing. So we should just follow in their footsteps, right? It's like, all right, if billionaires and big banks are moving out and pulling their stuff out, and countries are moving out, well, let's do the same thing, because we don't want to sink with the sinking ship. And that's what those actions tell me is happening. Not only are countries leaving the US dollar, there's tons of gold and silver leaving the vaults and going into which hands, we don't know. But that's not an individual. That's not you and me that's causing that kind of a move. That's countries, that's hedge funds, that's massive central banks. That's what's causing that kind of a move.
And I think that the common person is really catching up to that. I mean, I know in some of the conversations that we've had, I mean, are you seeing like an influx of people reaching out and saying, now that this is on Fox News, my husband or my wife or my children, they finally see it. Are you seeing like a big shift towards people, kind of finally ready to pull their money out and move it into things like gold and silver?
Yeah, I mean, for example, you've got people that watch the show. We've got people that watch the other shows that I'm on, and they've been in tune and awakened to all of this for a year plus, right? And they're thinking, well, but other people who are accustomed to their normal advisor at Merrill or Goldman Sachs or whatever, saying, when stocks stink, you go into bonds, and bonds stink, you go into stock, and just this old normalcy bias. Well, those are the ones that kind of cause the viewers of this show, even though we're telling the truth, to not do something. It doesn't become truth until Fox News talks about it. It's like, well, that's the same exact message, right? But once it hits the mainstream, you know that, oh boy, it really is happening, right? We were just a year in advance. So, but as we're identifying these things, and really it doesn't take somebody with 2 PhDs to figure it out. It doesn't take an amazing researcher like you to figure this out, Seth. When people run out of money, the stock market will do bad. When governments are running out of money and printing without discretion, they're not going to last, right? You're going to have inflation. When that happens, people don't spend as much, and when people don't spend as much, companies need to lay off because there's no revenue streams coming in. And this is this vicious cycle that's playing itself out. And I don't want to sound conspiratorial or anything like that, but I think this is exactly how they want it. Because the same people bringing in the new system are the same ones that were in charge of the old system. It's a zero-sum game, right? They actually win either way, but they win more under the new system because then it becomes all about people control. It has nothing to do with private transactions. It has nothing to do with paper currency that's still private. You could go to the gas station, the grocery store, farmer's market, flea market, whatever, pay for cash, and it's a private transaction. That's what they're trying to get away from, because you can't tax private transactions if people don't report them. So they're wanting to tax us into oblivion. And if we don't comply, well, they'll shut you off from buying or selling. This is what all of this is all about. But you needed a big enough crisis to get people to want a system where you give up your privacy and your freedom in exchange for perceived peace. This is, I believe, the crisis that's right underneath our nose. This isn't a normal collapse. This isn't a correction. This is the change of a global currency system. That's what's happening right now, right underneath our nose.
Yeah, you've really summed it up. Right? Absolutely. This isn't just a depression, it isn't a stock market collapse. It's a change of the global currency system. So for the folks that are watching or listening, if you're nervous, you're watching this happening, you're worried, look, I couldn't recommend more just reaching out to Kirk's team. it's free. Just have a consultation, talk to someone that lives and breathes this market, ask them your questions. So say you have your Vanguard, manager is saying, oh, silver is bad for this reason. Bring that information, set up a call. At least do a little bit of research, because just being paralyzed with fear doesn't really get us anywhere. So I'll pull up the website folks can go to. So it's goldwithseth.com. So if you go to the website, goldwithseth.com, you scroll down to the bottom, there is a little form, fill that out. That's how you can set up a free consultation. Or if you want to, you can just call 720-605-3900. Again, it's 720-605-3900. Just talk to Kirk and his team. So Kirk, as usual, it's always great. And I really appreciate you making the time for this. I get so much positive feedback from the viewers and from the listeners just saying, gosh, I've learned so much from Kirk. Thanks for having him on weekly. People really want to stay tuned. They see that things are changing in a seismic way. So thank you again.
You bet. It's my pleasure. We'll talk to you soon.
All right.